Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday, and I hope it finds you well out there. Our toll-free number, 800-951-0592. The website at allamericangold.com. And man, do we got a lot to talk about. So really quickly, couple of things, couple of house cleaning things. Thursday, we will be releasing our next rounds of meetings. And our first rounds of meetings for Texit in the North Valley, we'll be having meetings at the Patriot office. We'll announce those dates on Thursday. We will have another meeting in Chandler Monday the 17th, 6 to 7:30 at the library, room 264. You need to RSVP. Remember, we're keeping these meetings small. We're going to show you how to get on the exchanges and start buying and selling Texas coin. And right now, I tell you, buy it all at $4. You know, got some people that, I'm worried because the price. And of course, crypto's had a tough run here the last month and a half. Here's what I'll tell you: get out there and buy. That's what I'm going to tell you. That's all I'm going to tell you. I'll keep it simple. We're going to hit 50,000 miners. Remember, BOGO hash goes away. We're going to do that this week. But if everyone just did $100, that'd be $5 billion in volume for the week. So, don't worry. Matter of fact, I'd be in big. But I want to spend the show talking about that. We'll go in depth tomorrow with Texit. But getting back to today. So we had a big rally yesterday. We had the Senate passing, to end the shutdown. It's not over. It's still shut down. And I don't know what these guys do. I really don't. But Speaker Johnson, remember, it's got to go back to the House. Looks like they're not going to be able to vote till tomorrow, or aren't going to vote, I guess, till tomorrow. So I guess technically the government shutdown continues as we continue to wait for that. All of you that have to travel, sorry, that sucks. Hopefully everybody will be back to work soon. We had a major move in gold and silver yesterday, and they are holding their own again today. And then some really clear signals of how bad the inflation really is and is going to be. Because remember, I've been saying this all year. It's been very clear, right? No good choice. What were the choices? Fight inflation. I mean, really fight it. Keep rates higher. Crash the economy. That was option number one. Option number two, pretend that you care about inflation. Lower rates and spend a boatload of money and tell everyone we're going to grow our way out of it, which has never worked. But, okay, that's what they went for. And that's what we have. And that's what we're going to get. And this one, I don't know how to respond to it. It sucks. It probably needed. And it has to do with housing. The Federal Housing Finance Agency, the FHFA, Director Bill Pulte said the Trump administration is working on a plan to introduce the 50-year mortgage term for home buyers. So As if 30 years wasn't bad enough, how about 50 years? So the average first-time home buyer as of last month was 40. So with this new 50-year mortgage, if you're not dead, you'll have your home paid off by the time you're 90. As long as you don't refinance it, right, all that stuff. Yes, and thanks to President Trump, they said, by the way, this will be, quote, a game changer. Well, I guess he's right. I mean, we see it. We've seen it with cars, right? What's a new car loan now? 84 months, something like that. 7-8 years. You know, back when I was younger, I think 36 months was like kind of outrageous when they came out with that. It used to be like 24 months. Of course, you know, a new Corvette was like $3,000. You know, now it's like, I don't know, $300,000. The president saying that he's trying to create affordability for the younger generation. Well, okay, here's the thing. You're not making the house more affordable. I mean, it's a great thing for the banks, I think. But I guess you're going to make the payment more affordable. Yeah, isn't that wonderful? Yeah. $1 million home. That's going to be your new starter home in the future. 800-951-0592. Listen, it's simple. I will say this. I really feel like the Trump administration has done a really good job of telling you, hey, this is what's going to come. This is what's coming. I think they've done a tremendous job. And a little disappointing, not enough of you, at least for my liking, are taking it seriously. You honestly think that inflation's going to get better because they've decided, well, let's just make you more. Think about this. You know, Eric and I, way back when I was just a pup, and he was talking about, you know, a hamburger, right? A Big Mac is going to be $20, right? The minimum wage was going to be $30. A Big Mac was going to be $20. Look, we're almost there. We really are, right? We're almost there. And it's crazy. But anyone making $100,000 a year, outside of maybe if you're living in a few places, remote, smaller, right? You're poor. You're poor. By the time you just paying for the house right now, almost 40%. Here's the number, 38.4%. That's the median household spending on a mortgage payment. 40% of your income. What about insurance? Gotta have that. What about health insurance, car insurance? What about car payments? Yeah. Is there any wonder why 42 million Americans are on food stamps? And now their solution is, hey, we're going to keep printing money, so the price of home's not going to go down. How about we just 50-year mortgage? You know, at that point, I don't know. Are we getting ready to be like housing's generational? Like, well, my great grandparents, they bought this home and it was a 100-year mortgage. mortgage. And then my grandparents took it over, then my parents. And, well, we had some trouble, so we had to refinance it. Oh, maybe. Maybe now I'm getting it. Here's the good news. I only got 72 more years, and then I'll own it. This is exactly what Jason and I have been talking about. You will own nothing. Listen, it's going to be very simple. There's going to be a certain percentage of people that will own homes, own a car, right? Essentially, stuff that we used to think was middle class will now be, and I don't know what that number's going to be. 25? If I'm going to guess, maybe 25%. That's it. And then there'll be everybody else. And the question really is for you, which one do you want to be? You better have your gold and silver put away. I keep telling you this. Of course, what is that for? For the wealth you've already created. Why? Well, so you don't have to take out a 50-year mortgage. Right? That's why. That's insane. But it's coming. It's coming. And then, like I said, tax it. Why? Well, at least for the next, 90 days, not even now, right? 60 days, I'm hoping, fingers crossed, you have an opportunity to get daily income because you're going to need it. I don't think driving for Uber and Lyft are going to work. Being DoorDash for extra income is going to work. I'll tell you, so I was at that charity event. Remember I was telling you I was at that charity event for Texas over the weekend. There was a guy that had a robot there. Wow. Now, this thing was like, I would liken the robot to the size of, 5, 6-year-old, 7-year-old, it was a child robot. This thing walked, danced, you name it. We're on grass and uneven. It didn't matter. Now, the only thing it didn't have was hands. I think the hands are the problem. His hands were just balls. He'd like fist pump you. Yeah. They're coming. They're coming. Why do I bring that up? You know those jobs that they told us you didn't want? Yeah, well, the robots are going to do it. But let's take a quick look at the markets. Right now, it's a weird one. The Dow's up 200. I'm not sure if there's like one company that's something big. Is there a buyout? I don't know. The S&P's down 10. The Nasdaq's down 137. SoftBank says that it has sold its entire stake in NVIDIA. So Michael Burry, the big short, he was also out and accusing AI hyperscalers of artificially boosting their earnings. So this is, again, more evidence that there may be a bubble here in AI. CNBC says that they reached out to Oracle and Meta for comments. NVIDIA declined comment on Burry's accusation. And so, we're not talking about, just so everyone knows, Burry's not talking about some little company you'd ever heard of. He's saying, hey, these big guys, they're kind of misleading everybody with their earnings. Gold was up, 120 yesterday. Right now, gold's just sitting here, down $2. $4,115 right now on gold. Silver is higher again. Man, what a big day silver had yesterday. Right now, silver is up 18 more cents, 50.62. on silver as, again, we know the situation. The rates are going lower. I don't care who says they're not. They are. They're absolutely going lower. Today, interesting, we don't have the government. We're not really sure it's going to reopen. Right now we're being told Wednesday. But ADP, so now ADP, they do payrolls for companies. So they have their own payroll, what they call the private sector payroll. So they don't count any government jobs. They released a jobs number last Wednesday that said, hey, they created, I think it was like 40,000 jobs. Today, they're saying that according to the weekly numbers that they are getting, that for the 4 weeks starting October 25th, so I guess the last week of October, I don't know how they get to 4 weeks, but current. So the last 4 weeks, they're saying that private employers, remember, they're not counting government, private employers shed an average of 11,250 jobs a week. So the last time I saw this number, ADP was saying the private sector was hiring 14,000 people a week. Now they're saying things have changed and that private sector employees over the last 4 weeks shed 11,250 jobs per week, or basically saying a negative 50,000 job losses in the month. They started issuing these more frequent readouts after the labor market last month because of the lack of government employee or, the government shutdown. The hiring rate is extremely low. It is harder than usual for unemployed workers to find jobs. So this is interesting. Is the unemployment rate going to be even higher? This is, like I said again, they're going to cut rates again. Take advantage of the information that you know. Right? Everything that we are being told. Layoff for the month of October. Challenger Gray and Christmas said basically broke a record. Highest amount of layoff announcements for the month of October going back to 2003. It's Christmas time, right? Seasonal hiring. We're not really hearing it. I'm sure some of it is going on. It has to be. But we're not seeing any of these big announcements. And now, according to ADP, at least on the private sector side of things, they're saying companies are actually firing. When we sit there and we think about, okay, how can we take advantage of the news? Now, we've got an interesting kind of thing happening. Wall Street right now, and again, Wall Street's still really good, really high, but it's kind of like treading water right here because everyone's worried about what's going on with AI. Is this overdone? Of course it's overdone. I mean, go back. Really, what was the last big one? Probably the internet, right? Isn't AI and data warehouse similar to the internet? Right, it's going to change everything, and we remember the dot-com bubble and what that was. You got to remember, that bubble wasn't that bad. I mean, what was the national debt then? It wasn't even, what, $4 trillion? $4 trillion? Right? I mean, the Fed didn't even have $1 trillion on their balance sheet. Right? Heck, during that time, they were talking about paying off the debt. And nobody talks about that now. Right? No one's talking about paying off the debt anymore. This bubble, much bigger. But it makes sense, right? It should be much bigger. Why? Because we printed so much more money. So I don't know, what has been working for the last couple of years has been kind of like everything's kind of gone up. Maybe, housing up a little, maybe housing's kind of tapered off, right? But it's still up. But stocks are up. All the commodities, with the exception of a couple, way up, all-time record highs. I don't know. This is starting to look a lot more like stagflation. That's not good. Because what's the goal? The goal's hyperinflation, right? Which means growing our way out. And now more and more people are questioning the growth part of that equation. Are we going to spend all this money to just run in place? Patriot Radio News Hour will be back. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on a Tuesday. Another thing today about jobs. So is a 50-year mortgage now coming? Because, well, let's face it, the price of the home can't go down. So it can only go up. And no one can afford it. I'm going to say yes. Yeah. Terrible, but yes. Then we heard from ADP saying, hey, we're producing more data now because the government's been shut down and private sector employees are firing people. Then they're now saying that, of course, now, I mean, come on, this has been the case. The Bureau of Labor Statistics, of course, they're off, right, because of the shutdown. But people are now saying that the number of jobs posted, the JOLTS data, is actually not even close.
Am I on?
In fact, beginning in 2024, the job openings, they say, have outnumbered job hiring by more than 2.2 million a month. And they say that there's an ongoing problem with ghost jobs. Yes, ghost jobs, jobs that never get filled. According to the U.S. labor markets, it looks deceptively strong on paper, but it is simply an illusion. And they're saying this is the ghost job economy that inflates hope, wastes job seekers' times, and clouds the data that policy makers rely on to steer the economy. I don't know, right? I mean, how many of you out there, God, I apply to all these jobs and nobody ever responds. Well, guess what? Millions of the jobs that are posted, they're never responding. Right? They're just, we'll just see what comes out of it. Maybe some guy or gal will put a resume in front of our face that is so perfectly amazing, we may give them a call, but we're really not hiring. But we're gonna justify some. I can just see it, right? HR. Well, gosh, I got to justify my existence, right? At least I can say, Jason, well, I'm going through resumes, right? Yeah, but we're not hiring. Well, maybe somebody, tomorrow may need to hire. So I'll be ready when we do.
Yeah, it's interesting to talk about ghost numbers. Is that a nice way of saying rigged or fixed? The way that
rigged,
I've been
fake,
saying,
right?
It's ghost numbers. It's a ghost's fault. We didn't put it in wrong.
It's not our fault. They did it.
Do we have ghost inflation? When they changed it in 1980.
Right.
We have ghost inflation.
Listen, inflation's not that bad if you have a 50-year home mortgage, right? Inflation's not that bad if you have a 10-year auto loan, right? I mean, come on. Inflation's not that bad as long as you can get social assistance and food stamps to help you pay for things. I don't know, guys. This is, again, here's where we're at now. So let's update where we're at. Jason and I have been telling you for the last several years, there's no good choice, but here's the two that they have, right? Fight inflation, crash the economy, go into a big recession, depression. And that was choice number one. Now, obviously, that choice sucks. Choice number two, pretend to fight inflation, cut the rates, jack up the spending, right, and try to, quote, grow our way out of it. Which kind of is funny because at $38 trillion plus in debt, if we weren't able to grow our way out at $38 trillion, why can we do it now? Right? Of course, that won't happen. So we knew inflation was going to be here, right? Because that was, by the way, that's what they went with, right? They went with that choice. So now, what are our choices? Well, we've got two choices. Hyperinflation or stagflation. Those are the choices. This is what we don't know. Hyperinflation, right? The bubble keeps going. Michael Burry's wrong this time, right? The AI's not a bubble, and it's going to revolutionize the world, and somehow no one's going to be affected. The economy's going to grow at a rate that, quite honestly, I know in my lifetime we've never seen. Right? Because if you're going to, quote, grow your way, I mean, you're talking about, what, GDP of like 6, 7, 8%. Unheard of. You're talking about inflation. They'll probably just sit there, 4, 5, 6, which really means 8, 10, 12. And everyone's still working, right? We get 10-year car loans, 50-year home loans, right? All of that stuff. Or we get, now that's hyperinflation. Or we get stagflation. What's stagflation? Well, GDP growth is crappy. I'm not even saying negative. I'm just saying crappy. 2% or less. Right? People works hard to come by. More and more people losing jobs. The repo man's busy. By the way, guess what's trending on Google? How do I get help with my mortgage payments? Right? These types of things. And yet, guess what? We need the 50-year mortgage. We need the 10-year auto loan, right? Utility bills. Right now, guess what they just said for winter? By the way, ready for your power bill? Yeah, up 10%. That's what they say. The power bill on average is going to be 10% higher this winter than last winter, right? Insurance costs, but forget about 10%, 20%, 30% higher. That's stagflation, right? Everything kind of sucks, and yet everything's still expensive. Right now, at least this week, It's looked a lot more like stagflation than hyperinflation. We'll be back after the 800-951-0592. $10 gold pieces today, $23.35. $5 pieces, $11.25. $4,290 on $20 gold pieces today as the gold markets continue to shine. Well, for good reason. You know what? Here's the thing. I'm actually rooting for hyperinflation. Should I? Here's why, Jason. I want to get your comment on it. I think gold goes even higher with hyperinflation than it does stagflation, right? If we're stagflation, I'm thinking, 6,000, 7,000 gold. Hyperinflation, we can definitely go over 10,000.
No, I agree. Gold on Valentine's Day of last year the spot price was 2,000. So we've over doubled in less than 2 years. To me, that means, as a leading indicator, we're going to see the doubling of prices here in the next couple of years. I don't know what hyperinflation, I think, is just based on how fast is the hyper, right? With stagflation, what you're talking about is a grinding market where they try to keep those prices down. And, society has to learn to live with a lower standard of living as you earn the same and the price of everything goes up. But,
it's mild. It's a mild 4% inflation, right? It's a mild 3%.
If we get to 2027 and prices have doubled, what is that? Is there something in between? Is there hyper stagflation? is there?
You know what? I don't know, right? Maybe with Jason say, well, maybe there is another choice. We just don't know what it is.
Maybe
yet,
you call
right?
it severe stagflation. Maybe severe stagflation. Is that what we're looking at, Joe? And then the gold prices don't explode because we know. When Venezuela was really in a bad spot back about 2018. There was a short time where gold became almost real investment material, where you could buy an entire house with an ounce of gold. I was actually on the air to say, man, if I only had a contact in Venezuela, I'll throw 4 or 5 ounces of gold down and buy half a neighborhood, and you'd be doing really well right now because those prices bounced back. That's hyperinflation. Do we have that, Joe? I think the dollar, as much as it's a Federal Reserve creation, is still stable enough not to have hyperinflation here. So stagflation sure looks to be on the menu, Joe. But here's the thing. Gold going up like it has in essentially 18 months, does it do it again another 18 months as a percentage? That means we could have $8,000 gold by 2027. I think that's possible.
Yeah, you can't rule. I'll say this: not only can you not rule that out, right, which we would like to. The problem is, not only can we not rule it out, this is not like a crazy thought. That's the part that I don't like, right? This is like, what are the odds of it doing that? And we're not saying, well, gosh, there's a 2% chance or a 5% chance. The way they are going about things and their propensity to spend, their willingness to ignore the realities of the economic data that is in front of us, the ability to continue to lie about what really is the cost of everything and what is happening to the standard of living of the United States. Jason, it's not even far-fetched. That's the thing. What you just said, that should be far-fetched. And the reality is that it's not. In matter of fact, you could almost argue it's got more than a puncher's chance of happening. I think that's the problem. Is it Double J's baseline case? No. But guess what? It's probably in my top three. It's not probably, it is in my top three.
And I can hear doubters out there when Joe says we don't want these higher gold prices. And I know there's a lot of people that say, oh, no, come on, you're selling gold. You want the higher gold prices. Well, I can sit here and tell you that we were selling a lot more gold at 2,000 than we were at 3,000 and at 4,000. So we sold more gold at 1,500 to 2,000. We sold a lot more gold. And if the gold price keeps shooting up, we're going to lose more and more of those smaller size customers that really float our boat, so to speak. And we're going to be dependent upon the big customers that we have that can afford it. And Joe, there's a lot of big gold companies selling to those big customers, and it'll be a fight for survival at that point. So 8,000 gold doesn't necessarily mean Joe and Jason are sitting in a really happy spot. We could find ourselves with a very expensive gold and no customers to buy it, Joe.
Well, again, that was a little more truth than I wanted to give, but yes, listen, I think that is a very likely possibility, and it's why I'm so adamant about finding more revenue streams, figuring out how to preserve what you have. Yes, I know. You're like, well, gosh, Joe, the price is high. It's not.
It's not high.
It's not.
It's
not even close to high.
The price of gold is always honest. How's that? It's honest. It's telling you what's happening, Joe.
Yeah. It's kind of like, hey, the price of gold is the honest money. I mean, that's a great way of looking at it. And right now, they can't afford the honest money. They can't afford to even be honest, let alone the honest money. Patriot Radio News Hour, final segment coming up. 800-951-0592, Patriot Radio News Hour, Joe and Jason. Again, by the way, before I forget, Happy Veterans Day. Totally forgot. Of course, that's something we probably should never forget. Thank all of you for the sacrifice, and it's going to be really interesting what everything looks like this time next year. Right now, it has the feel, like we said, that this may be a stagflation, and maybe is it a hyper stagflation, right? I something that we haven't seen. I don't know, but it is something where just the reaction of gold and silver with the government shutdown ending, and knowing the big money spending is getting ready to kick in, I hope you're prepared. Get your gold and silver put away now while it's still affordable. Check out, text it, call us, ask questions, ask me hard questions, ask Jason the hard question. We're happy to answer them for you. We know all the crap that's out there. We do. None of it's true. But we know. We'll tell you. The ability to have daily income is going to be vital if you want to own anything, period. I mean, are we looking at a situation where maybe 25% of the population can own a home? It keeps falling. It just falls and falls and falls and falls and falls and falls. The home ownership, car ownership falls and falls and falls. I mean, Jason, it's happening right before everyone's eyes, and it's been gradually happening, and then every once in a while we there's a big drop. right? Then it's back to gradual, and then a big drop, and then back to gradual, and big. We're getting ready for the next big drop.
Yeah, I think you're right. And watch out, right? Watch out. And I'm going to see if they actually get this government opened up and see if the spending is going to keep gold and silver pushing upward. I'm a little surprised
that it's. I mean, I don't know, but why is it they have to wait till tomorrow? I don't know. But
probably a reason. We don't know. There's a reason.
Right, there is a reason. I don't know what it. I want to know what it is, and believe me, whatever they say it is, that's not the reason. Right? That's not the reason. But I don't know. It's
probably the bag of monies have to actually show up to who gets their bags of money, and then therefore they can sign it the next day.
Maybe that's what it is. Wait a minute. We need to get a little. We got to stuff a little pork in this thing real fast.
There's 8 Democrats
to make it all happen.
8 Democrats putting their reputation on line. We got to get them their little bag of money for flipping their vote, and so that way everyone can spend their money. Spend the money.
Nope. We'll help you spend your money right here on Gold and Silver. 800-951-0592. Ooh, this just out. Barclays downgrading Oracle's debt. Interesting. Is this the beginning here